Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. In the previous week, global markets were rather calm except for Friday. The non-farm payrolls released on Friday showed strong employment growth. This pushed the yields sharply higher, euro lower, and gold lower. Good morning, JK. Why did the markets react so sharply on the NFP data? Please decode it for our listeners.
Good morning, Swaraj. So the lead up to the non-farm payroll report, we had several indicators showing the job market is cooling off. We had lower job openings, lower private, payroll jobs as per ADP report, and also 4-month high in the weekly jobless claims at 229,000 also. It was believed that the market will see a lower number on the NFP, but that turned out to be wrong, and the market was positioned quite short on the dollar, and particularly quite long on the bonds. So we were almost testing 4.25 on the 10-year yields, and now that has seen that position has got reversed, and we have seen big swing up in the yields, both 10 and 2-year yield, and that has directly had an impact on the dollar. We saw the dollar yen, which is very vulnerable for the yield moves, and also the euro, which was kind of long market. Most of the time we saw it spending between 870 and 9, and inability to break 9, and I think the disappointment was very clear to see. And that's how we saw the euro also falling and indirectly impacting the dollar index also. Of course, the other commodity currencies also fell because we had a big slide in the commodities, be it copper, silver, or gold. The trigger initially for the precious metals falling came in the Asian time, when the report said that Chinese central bank may have stopped accumulating gold into their reserves, and this had an immediate impact of bringing down the gold, and the sell-off continued into the European and American market. So, and the data from US just added the fuel to fire. We saw gold slipping below 2,300, and the momentum looks good for more correction in both the precious metals. It's a combination of positioning, be it currency or the metals. It's a combination of positioning as well as the strength of the data that has actually impacted the prices. But I am not looking at too much of movement outside the recent ranges, like for instance, euro 0.709 and dollar index also 0.6 and 0.3 ranges should hold. As far as the Europe in particular, also there has been a setback for the centrist parties in the European parliamentary elections. The right-wing parties are winning, so that can in the medium term have some impact on the euro if the legislation process is affected. Immediately there has been some downward momentum on the euro gained because of this factor, and we saw the euro trading 20 points lower in the Asian time as well. But no, it should not impact immediately. It's a more of a medium-term factor. As the rupee is concerned, the markets, Indian markets have got over the initial disappointment of the elections, not throwing up a strong government, and we saw the index trading almost up to the high seen on 4th. It just a few, maybe a few 100 points away, and that's a big sentiment booster. And as of now, the indications are that coalition will be remain strong for the near term, and we'll get more indications on the economy and the policies from the full budget that will be presented by the government in due course, maybe in a month or so. And that, so as of now, confidence restored in India's strength, and although FI figures show that there have been a big sell-off in the first week, around 14,000 crores. Fridays saw some inflow, but overall for the month we are seeing a big inflow. This is the third month of large outflows that we are seeing from FII. So, but rupee not much to concern because RBI is very much anchored at above 83.50, and also at lower levels they keep accumulating dollars. So I don't think we move much unless we see a big setback to any policy process in India, or move up in the dollar China yuan. So as of now, steady markets, and India's back to where it was before the elections. Thank you.
Thank you, JK. And as you mentioned, it's all a game of positioning. Lead up to NFP, there was weaker data on the jobs front, and that narrative changed sharply with NFP, and markets which were sort of positioned long bonds. It caused some sort of reversal, and something similar happened in gold and silver, where there was excessive long positioning. In Europe, there are elections happening in some of the European countries, and it shows some sort of change in the political theme which is going on there, from centrist to sort of right wing. And in India, after all the political turmoil, a strong coalition has been fueling the rally in stocks. The full budget possibly next month is something markets would be watching out for. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.